Query successful, try again without apps. What if you could trade major company stocks 24/7, even on a crypto exchange? Sounds like an innovator's dream, right? That's the promise of Kraken xStocks, tokenized versions of real-world stocks and ETFs, backed 1:1 by the underlying asset, and designed to bridge traditional finance with the world of crypto. They offer convenience, instant settlement, and access outside of regular market hours. But in this hybrid territory of tokenized assets, the risks are just as unique as the rewards. Before you jump in, you need to understand the critical risks that come with investing in Kraken xStocks. First and foremost, you do not own the underlying share. This is synthetic exposure. An xStock is a token that tracks the price of a stock like Apple or Tesla, but it does not confer the rights of a traditional shareholder. You won't get voting rights. And in the rare but serious event of the underlying company's liquidation, you have no legal claim to their residual assets. The return is similar to the stock, but not identical. Due to fees and how corporate actions like dividends are handled, they're typically reinvested, increasing your token balance rather than being paid out in cash. The second major risk is platform and issuer risk. xStocks are issued by a third party, backed assets, and traded on the Kraken platform. This means you are exposed to the financial and operational health of both companies. If the issuer, backed, faces solvency issues, or if Kraken suffers a catastrophic operational failure, such as a major hack or system meltdown, your investment could be at risk. This is different from holding shares with a major regulated stockbroker. Finally, and perhaps most critically in this space, is regulatory risk. Tokenized securities operate in a rapidly evolving and often ambiguous regulatory landscape. Kraken, like many crypto exchanges, has faced legal scrutiny globally. If regulators take action against Kraken or the xStocks issuer, they could be forced to restrict or completely terminate the service. That could leave investors unable to liquidate their holdings or potentially facing significant losses. These tokens are often not registered with local securities regulators, meaning you may lack the consumer protection you'd expect from a traditional brokerage. Kraken xStocks provide an exciting gateway to the stock market for crypto enthusiasts, offering a seamless experience with instant settlement and 24/5 trading. But this convenience comes with layered risks: the lack of traditional shareholder rights, the dependence on both the exchange and the issuer, and the ever-present threat of regulatory uncertainty. Remember, you could lose your entire investment. Be sure to read the full risk disclosure documents before trading. With that said, thanks for watching, and until next time.